Ladies and gentlemen, are you ready for a no BS breakdown of what happened today in Tesla stock and markets and what's coming tomorrow? Oh boy, this one is probably going to shock you. No, Tesla stock did not sell off because they are stopping production of the Model Y and the Cybertruck at Giga Texas for a week. No, that did not send Tesla stock down 4% today, and then down almost now another 1% in after hours. No, this is not about the Middle East conflict. It's not. This is about the Fed tomorrow. In this video, I will break that down. I will also clearly share with you the headline news that sent Tesla stock lower, but explain why it's not the reason Tesla fell today. Okay, a lot of people don't understand these things on a deep level. It's easy to point to a headline and say, oh, that's the reason. It's a little bit more difficult to actually try to understand what's going on in markets. So, ladies and gentlemen, we're going to get into all of this information. First and foremost, the only thing I ask you to do is hit that like button and subscribe to the channel. If you have not done so already, check out the trading community down below in the comment. Now, also, if you guys have not checked out the trading community, check that link out down below in the description of this video. What we are doing over there is finding information disparities, okay, in smaller cap companies. What that means is, for an example, in Apple, Nvidia, Tesla, in, Starbucks and Chipotle and McDonald's and blah, 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 name the well-known company, there is no information disparity. Everyone has the same information. Marginally speaking, some will be more right than others, but everyone knows the same things about those companies. It's the undercovered stocks. It is the stocks that don't have a lot of attention, where there's great developments at these companies, just people don't know about them yet. That is the area that I have been focusing on that has led to big winners in the past 6 months. Nebius, Novartis Semiconductors, Applied Digital, a lot of them are in the AI field, but some of them are actually in the healthcare field, one of which has already started to blow up that we talked about just a couple of days ago and started investments in. So check that out if you guys have not done so already. That is something I'm very excited about. Nonetheless, let's get started. Okay, first and foremost, in your no BS report tonight, I want to explain this so everyone's on the same page. Tesla's stock today did not sell off because of this headline. It says, Tesla stock slips after report EV maker is pausing Cybertruck and Model Y production. No, wasn't this. It says the production stoppage begins June 30th. Business Insider reported, citing a staff meeting where the announcement was made. The pause, which is for maintenance on production lines, would be the third such shutdown at the Austin facility in the past year. Either way, a 1 week shutdown does not matter. The other thing that I will point out, which may be shocking to some, is that Tesla, on their last earnings call, said, quote, plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. Last I checked, if my calendar's correct here, tomorrow's June 18th. Huh. And they're scheduling a shutdown for a week at their factory? Wow. Wall Street's really bad at connecting dots, huh? Just really, really bad. Okay, it says these vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be produced on the same manufacturing lines as our current vehicle lineup. You gotta give it up for stupid Wall Street. Like, come on. It was right here. It's right in front of us. Oh, and they're shutting down the factory for a week, and that's some big problem. No, they're retooling their production lines to start building some of these newer, cheaper, lower priced Tesla products. I would imagine. Now, obviously, I could be wrong. Maybe they're shutting the lines down, twiddling their thumbs half the time, and cleaning things. I don't know. But just connect the one dot to the next, and we don't have the details of this or confirmation of this, but it looks like they're shutting down their factory for a week to retool their production lines, because they're the same production lines that the, call it, Model 2 is going to be produced on. I just think we haven't gotten that news yet. But wait till we do. When Wall Street realizes, oh crap, they're actually shutting down the factory for a week to get ready to start producing cheaper Teslas. Oh my gosh, why did we sell this stock off? Okay, now again, I don't think that's necessarily why Tesla stock sold off today, but this headline didn't help. So the first thing we really have to clear up is markets. Okay, let me start this way. Over this weekend, I expected markets would bounce on Monday. What happened? We bounced on Monday. Yesterday, the S&P was up almost 1%. We bounced. Okay, as expected, Tesla was up roughly like the same 1.2% or so. It was up more throughout the day, kind of gave back a little bit towards the end of the day. On Sunday, I explained why stocks would sell off on Tuesday, which was today. The S&P fell 0.85%. Down here in after hours, another roughly 0.25%. Why on Sunday did I already know that stocks would sell off on Tuesday? It wasn't because of the Middle East. It wasn't because of specifically, company news. It was because of the Fed on Wednesday. You have to understand something. Wall Street, they manage portfolios differently than we do. Okay? It's pretty comical how easy it is to kind of guess or figure out what's going to happen on certain days in the markets. Right before a new summary of economic projections, when the Fed has been relatively hawkish, it's not a huge shocker that markets sell off the day before that event. It's because hedge funds and institutions, they lower their exposure to stocks ahead of big volatility catalyst. That's kind of the long explanation, and you can get into more nitty-gritty details of that. Higher the beta stock, higher the correlation, the more the selling. Tesla today, down almost 4% in regular trading, down another almost 1% in after hours. Not because of the Middle East, not because of, Tesla shutting down production of the Cybertruck and the Model Y for the third time this year for a week starting on June 30th. Okay, that was not the news that caused Tesla to fall today. It's because it's the day before the Fed, and Tesla has very high beta and very high general volatility. Imagine it like this. If the markets are going to fall 1%, Tesla's probably going to fall 3 to 4 or 5%. If you're a hedge fund or institution and you want to de-risk your portfolio heading into a major event like the Fed and a new summary of economic projections, are you going to sell McDonald's or are you going to sell Tesla? Okay? You're probably going to sell Tesla. Now, that's not what I would do, but that's what hedge funds and institutions do that control this market. It's not a shocker that stocks were down today and the highest of volatility stocks were down the most. And here's how I can tell you this sell-off, this little sell-off we've seen today, has nothing to do with the Middle East situation. Now, maybe a little bit, like I shouldn't say nothing to do with it, but it's not the main show at this point. Why? Because energy markets really don't care. Yeah, sure, oil has went from $58 a barrel to $75 a barrel, but you're basically at the median level you've been at since 2023. Over 2.5 years now. If we were really expecting this to be some kind of economic, problem fueled by a rise in energy prices, you would need to see energy go up a lot more. $75 a barrel just doesn't do it. Okay, so if we were really fearful of this Middle East situation causing energy to go up too much, and that's why stocks are selling off, you would see energy up a lot more. Hopefully that makes sense, but you're not seeing that. Okay, now the real risk is in the Middle East. If the Strait of Hormuz were to be choked off or something along those lines, I've explained here on this channel why I don't think that's even possible for Iran. Like, their regime would die. They would get taken out. The U.S. would take control of that strait within hours. Okay? It would be the end of the Iranian regime. I don't think they exactly want to do that. But hey, it's a possibility. I mean, anything's a possibility. But the Middle East situation is not the biggest drag on markets today. It is, again, the Fed tomorrow. Here's the good news, though. I think the Fed is going to give us some really good news. Tim Rouse on X today said there are good reasons to think the Fed would be preparing to cut interest rates this week due to recent improvements on inflation, if not for the risk that tariffs pose to prices. Quote, the past 5 years have, I think, changed people's perceptions of inflation and what can happen. The fact of the matter is the Fed is pretty ignorant right now, safe to say. The Fed has not a clue what they're doing. The Fed, like, all of those criticisms of the Fed are true. Let's be honest. The Fed should be cutting rates right now. Let's leave it at that. I don't want to criticize the Fed too much because they have a bit of analysis paralysis right now. But here's why tomorrow I'm looking at as a positive event. It's actually pretty simple. Tomorrow we get a summary of economic projections. We have seen GDP come in weak in Q1, which we basically already knew that by March 19th, the last SEP. So that was already forecasted in the dot plot right here. The Fed took their estimates from 2.1% GDP growth in 2025 down to 1.7%. Could they revise those lower a little bit more? Sure. But they already front ran that. They already changed their estimates based on Q1 GDP. Q2 GDP is tracking at 3.5% according to today. So are you really going to lower your growth estimates too much? Probably not. Okay, fine. That's the GDP column right here. What about the unemployment rate? Well, the December projection was 4.3%. The unemployment rate, they rose that to 4.4% by the end of this year. Well, last I checked, the unemployment rate in May, so the latest report, was 4.2%. Okay, so it's lower than even their December projection. Are they going to raise their unemployment forecast again? Probably not. Okay, fine. That's the unemployment category. PCE, let's just look at core. Headline PCE is like the same, right? The Fed really cares about core. In the December projection, they were at 2.5% by the end of 2025. They rose those estimates by March 19th to 2.8%. Okay, fine. What's the core PCE? Like, this is simple stuff, okay? The core PCE price index was unchanged last month at 2.5%. Okay? So it's right on target to where the Fed thought it was going to be this year in December. So the Fed already raised their PCE targets for inflation to 2.8%. The fact of the matter is, we have not seen tariff inflation at all yet. In fact, we've gotten really good inflation reports, as Nick Timmerhouse wrote on X. Okay? So we're going to get a new summary of economic projections tomorrow. Do you really think it's going to look more bearish than this? Do you think the Fed really has room to raise their, let's say, core PCE inflation targets to 3% by the end of this year when inflation's done nothing but go down for 2 months in a row? Huh? You can't raise the forecast, right? That would literally show incompetence from the Fed. That would make no sense. That would be like, I mean, any other dramatic example could apply here in the business world, but that would be like, inflation going negative 2 months in a row, and then the Fed's like, hey, we need to raise rates. Like, what? That's incompetent. That makes no sense. You're not seeing inflation. They're not going to raise their dot plot estimates. And if they do, maybe the Fed's independence should be questioned a little bit more heavily. And I am all for Fed independence, but that really shows a lack of education. Or literally maybe a political thing is going on at the Fed or something. But hopefully this makes some sense. There is no room for the Fed to raise their targets. If anything, they're probably going to lower their targets. And this dot plot is going to be a lot more bullish. Now, the dot plot's one thing, but Fed Jerome Powell speaks at 2:30. That's what Wall Street really pays attention to. And again, the same thing applies here. The Fed was nervous about inflation. We've had 2 months of post, Liberation Day tariff inflation numbers that have come in way lower than markets expected. The inflation is not showing up. At the same time, there is now a rise in initial jobless claims. We will get a new round of initial jobless claims coming out tomorrow morning, expecting the highest number, quite frankly, we've seen in months, at about 255,000. The Fed has no room to be hawkish here at all. Zitch, zero, zilch, nothing. No room to be hawkish here. So what you're going to get from Powell tomorrow is a pretty damn dovish Fed. Powell is going to say something along the lines of, we expected some form of inflation from tariffs. It is possible that Chinese and global manufacturers take on more of the inflationary, burden, and we don't see the rise in inflation that we were expecting. Boom, that sentence right there, stocks are off to the races. Okay, that leaves the door open to, hey, we may still see it, but it's a possibility that we don't see it. And in that scenario, that would line up for the Fed to cut rates a lot this year. Keep in mind, the core PCE rate is 2.5% and trending lower, and the Fed is at 4.5%. As you are seeing retail sales missed this morning by that was actually a pretty bad report. The household survey for the jobs report continues to come in really bad. Okay. And obviously the rise in initial jobless claims that we are expecting another rise tomorrow morning. Mix that with no inflation. The Fed has zero room to be hawkish tomorrow. Now, Wall Street is pretty hawkish on the Fed tomorrow. That's where I think you're going to get the rally and upside in markets. Tomorrow, there's a 98% chance the Fed holds steady, and like a 2% chance the Fed cuts in June. Tomorrow, they're not going to, okay? The Fed's not going to do anything tomorrow with their federal funds rate. What is going to change a lot here is the July 30th pricing on these contracts. These are contracts like people can buy them and bet on them and speculate. The current probability is 85.5% that we don't get a rate cut July 30th. Okay? That's like 6 weeks from tomorrow. There's a 14.5% chance we get a rate cut July 30th. So overwhelmingly, Wall Street is betting that we do not get a rate cut until September 17th. I think these odds are going to fall a lot tomorrow. I think the odds of a July 30th rate cut is going to skyrocket. Okay? Not necessarily because the Fed is super worried about the economy. I think they're going to continue to kind of say, hey, the economy looks okay for now. We're watching it, but it looks okay. I think it's really going to be the inflation. Okay? The Fed's going to outline or basically tell us that if we don't see inflation by the next Fed meeting, they're going to be in a position to cut rates. That they're going to have enough clarity by the July 30th Fed meeting to cut rates or not. And based on the inflation numbers we have seen recently being so low, these odds are going to plummet tomorrow. And stocks are going to rally based on a more accommodative Fed. So what I think you're really going to see happen is Wall Street's going to start opening up, to the idea of a cut at the next meeting, July 30th, a cut in September, and then probably a cut in December. So probably 3 rate cuts this year. Okay, maybe 4, depending on if we don't see any, inflation. We may get a cut at every Fed meeting throughout the rest of this year. But again, bottom line, there is no way in hell the Fed has any room to be more hawkish. And Wall Street is pretty hawkish on the Fed tomorrow. They're not expecting much of a change from Powell. I think Powell has an obligation to correct the Fed's stance from being super worried about inflation to, hey, we're still watching inflation, but it's not showing up. And if it doesn't show up, we need to act. That's the Powell that you're going to get tomorrow. And that is not in the bingo cards for Wall Street at this point. That's going to catch Wall Street by surprise and send stocks higher tomorrow, in my view. Obviously, I'm not a financial advisor. I don't have a crystal ball here, but this seems like the most likely outcome from my perspective. And then blah, blah, blah. You could talk about the Middle East. What if the U.S. gets involved? This and that. It doesn't matter. Oil is not reacting like it matters. Okay? Now, if oil were to skyrocket and go to, $85, $90 a barrel, then we're talking. Then that becomes an economic problem. But for now, oil is not reacting as if there's some kind of imminent danger from this conflict. And again, Wall Street doesn't give a rat's ass who's bombing who or what's happening. Wall Street just doesn't care. Stocks don't trade based on human lives, unfortunately. And at this point, I think it's a bit of just a dramatic headline producing situation at this point from a market's perspective. Obviously, it's terrible to see, and the loss of human life is never a good thing. But again, from a financial perspective, it doesn't really mean anything unless oil skyrockets, and it's not. So obviously, again, I don't buy that was the catalyst that sent Tesla stock lower today. It was because of the Fed and the, again, how hedge funds and institutions manage risk in portfolios. Ahead of big volatility events, they de-risk. Should they? I don't know. That's not my decision to make. Would I? No. Especially not ahead of tomorrow's Fed event that seems pretty straightforward. But the algorithms, the quants at these funds, they do. Anything that has big volatility potential means sell stocks. That's what it means. When the VIX goes up, that means sell stocks. When the VIX falls, that means buy stocks. It's actually that simple. And that's why I knew that Tuesday was more than likely going to be a red day. Unless something good happened. Nothing good happened today. The Fed's tomorrow. It was a red day. That's not super shocking. So let me know your thoughts on all of this down below in the comment section. I think it's critical to understand before tomorrow. And I hope after this video, you have a better understanding of what's going on in markets right now. Middle East does not matter unless something changes with energy markets. It's just scary headlines for now. But again, it's really about the Fed tomorrow. That's the big catalyst for our markets. Let me know what you guys think about all of this down below in the comment section, ladies and gentlemen. If you guys want to come, again, trade with us live in real time, check out that link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.